Good morning, good afternoon, good evening, wherever you are in the world. Welcome to the final panel of 3Cs 2022. This one is going to be, as the young people say, lit, because we're going to be discussing the spectacular collapse of FTX and its implications for the Caribbean. We've assembled a panel of absolute experts. I couldn't think of anyone better to join me on this panel than Ambassador Gabriel Abed, than Oliver Gale, and Dr. Christopher Malcolm, whose video is not showing us yet, but soon we'll have him up and visible to you, the audience. Let me say from the start that there's a lot to demystify and break down about this. But first, I'd like to get you, the audience, about 1,200 of you currently online from more than 40 countries, to learn a little bit about our presenters. And I'll start with Ambassador Gabriel Abed. Just briefly introduce yourself and say a little bit about what you know about this particular area.
Oh, good evening or good night from Abu Dhabi, Dr. Boyce and audience members. I'm Barbadian born, educated in Canada in the field of cryptographic systems and network security. And I founded bit.com with Oliver Gale way back in the early day. We were some of the earliest players in the blockchain space, and I had seen the technology in a very early way. I had seen its potential and how it could really transform our region. And I was fortunate enough to have a friend like Oliver to call upon and say, hey, come join me in this crazy mission. I think this technology could transform our region. And Oliver was crazy enough to do it. In 2017, I left Bit to go on to co-found Digital Asset Capital Management, which is a hedge fund, which ended up being the best performing hedge fund in its class for 3 years running. And then from there, I continued to pioneer and create blockchain companies until sometime about a year and a half ago, while I was living in Dubai, the government of Barbados saw it fit to appoint me as their ambassador to the United Arab Emirates, where in March of last year, we opened our embassy, the first diplomatic mission that we have in the Middle East. Of course, the UAE has now become a mecca for blockchain technology. It was one of the reasons that we targeted this region, both to have diplomatic relationships between Barbados and the Middle East, but also to look at a new area of technology-based diplomacy.
Thank you. And Oliver, tell us about yourself and Panther and what's happening. I see the shirt. You're wearing the shirt as well. Tell us.
Yeah, sure. So Gabriel and I had been friends for very many years. I'm also from Barbados, and he quite rightly points out he propositioned me in very early, I think it was February 2013, with this crazy novel payment network called Bitcoin, and asked me if I wanted to co-found what ultimately became bit.com. And so with a background in international finance and economics, I joined him, and with such an early head start on the rest of the Caribbean and in some cases the global market, he and I established a number of technology innovations and firsts in the region, mobile wallets, ATM networks, exchanges, mining operations, and ultimately central bank digital currency systems. So we both made our separate paths in late 2017. On my journey, I set up a private venture studio called Base 2, and have from that studio invested and incubated a number of blockchain technologies and protocols. The most recent of which is Panther Protocol, whose shirt I'm representing. I'm CEO and co-founder of Panther, and that protocol uses zero knowledge technology to enable confidential and compliant DeFi, addressing some of the issues that public blockchains raise for things like data surveillance, privacy, the right to freedom of speech, and other key issues such as portfolio construction and risk management. So It's a pleasure to be on the panel.
Absolutely great. And while we wait for Dr. Malcolm to rejoin us, I just want to emphasize to our audience that there's a really important reason why you're here with us. You're not only experts in your respective areas, but you also know the region well. You're from the region, and therefore you're really well placed to be able to chop this up. So let's start, Gabriel, with the basics. Tell us in a few words, what is FTX? What is FTT? Who is SPF? Who is CZ? And what in your view, is the FTX scandal about?
Okay. Well, FTX is an exchange, a push and pull matching engine that allows a consumer to place a market order against a particular asset, and the exchange matches it with another consumer on the other side who's similarly trying to execute a market trade. Long story short, it allows persons and consumers to trade various types of cryptocurrencies from one to another. It's a very useful solution. It's a century-old business model. There's nothing new about exchanges. They've been used for decades. FTT is meant to be an underlying token against utility of that network. And Sam Bankman-Fried, or otherwise known as SPF, was the founder of this environment. And your fourth question, who is CZ? CZ is Changpeng Zhao. He is the CEO of Binance.com, another exchange, which also happens to be SBF's largest competitor. And in the last couple of weeks, we saw FTX implode due to otherwise known as a bank run, where users ran to the exchange to try to pull out their funds, and the exchange wasn't able to honor those withdrawals because it was not fully solvent. I can go into a lot more details if you have any specific questions, Dr. Boyce. I was right there watching it all unravel.
Right, I do, and we're going to get into some exciting stuff here, because Oliver's going to help us to link those things that you mentioned. And in your intro about what you understand as the FTX scandal, Oliver, did CZ have anything to do with it, or was it just FTX's failure was inevitable?
The failure was inevitable. Fundamentally, I'm not the judge, so I can't pass the verdict. But the overwhelming body of evidence suggests that there was one of the worst frauds in the history of global finance. So CZ was the canary in the coal mine, if you will. So the way the events unfolded was a balance sheet of Alameda was leaked onto Twitter, crypto Twitter, as they call it.
But tell us who's Alameda, please.
Well, this is the part of the issue. Alameda's ultimate beneficial owner is none other than SBF. So what you have is an exchange who is in partnership and operating a commingled business model with a trading firm with the same owner and with no appropriate controls and disclosures on how the assets are flowing between these two entities. And so in a well-managed financial ecosystem, if an Alameda balance sheet is disclosed and it looks unhealthy, which it did, a very poor asset to debt ratio, and many of the assets themselves were tokens issued by none other than FTX. So you have this recursive loop of artificially inflated assets on the balance sheet. And so in a well-managed financial ecosystem, what looks like a potentially insolvent trading firm is not an issue, and it should have had no impact. However, where CZ came into play was he has insight greater than most, given that Binance was FTX's largest investor at one point as well into the operations of FTX. So he has insight into the fund flows and the operations of FTX. And when he saw the Alameda balance sheet, he thought it was his responsibility to disclose to the public that Binance would be severing all relationships with FTX, selling all of their holdings of FTT, and doing so on the market in a transparent fashion. So,
And
you know,
that's what led to
can I
the run
correct
that.
something?
sure, yeah,
Can I
please.
correct something? I actually was, as a matter of fact, CZ's 20 feet away from me right now. I was there the night. I was right next to him when he typed that tweet out. And it wasn't because of the leak on CoinDesk, which is a news article website, a journalist-based website, that actually released the Alameda balance sheets. You see, the issue is, Dr. Boyce, is that the solvency of FTX was based off of, as Oliver mentioned, this artificially inflated token called FTT. And but the other issue was SBF was in Washington, D.C., working with regulators to actively bring new types of regulation to the industry. And one of the things that he was doing was speaking ill of industry competitors. And that word got back to CZ and persons like myself. And while we were together, CZ wrote a tweet that he was selling all of his FTT position, which he had owned from an investment he made. And now we're talking about a multi-billion-dollar position. And when you have sell pressure, what happens is the price of the token inherently should drop against that sell pressure. But so there was no intention to force FTX into a position. It was merely one of, this person is a bad actor. They're speaking ill about the industry. They're making attempts to do unjustified things within the industry, and therefore we no longer wish to be participants within that ecosystem. That was the decision that led to CZ deciding to exit his position, which he publicly and transparently tweeted about. What ended up happening was the CEO of Alameda, a lady named Caroline, went and tweeted right afterwards that, and this was what actually caused the bank run. She tweeted that anything they would sell, they would buy at $22, and thus she pointed out the floor, and the market observed this, and that actually caused a scare in the market, which ultimately led to others running to the exchange to exit their positions and dump their FTT. And that ultimately led to a downward spiral, because if you looked at the books and the historical trading data, there was no resistance after $22. And that would have meant that a free-for-all, quick drop and a spiral effect. And that's exactly what we saw. Whereas CZ's intentions were merely to slowly exit his position and to do away with being part of competition that was not healthy for the ecosystem.
This is all brilliant stuff, and I'm glad we're having these groundbreaking insights on this panel. Thank you so much for that, Oliver, and thank you so much for that, Gabe. I want to grab Dr. Malcolm before in the event he pops off again, because I was delaying this aspect of it until he returned, because I'm not an expert on it. He is more of an expert on it. But the audience must be asking themselves, why are we talking about FTX and FTT in the Caribbean? Well, there's a big part here. Dr. Malcolm, we've covered what is FTX, what is FTT, CZ, etc. But tell us, why are we here in the Caribbean? Well, the links to the Bahamas and Antigua. Share your views with us.
Thanks, Toussant. And you know, Murphy's a wicked man, but we will move on.
We'll move on.
But what it is that, and unfortunately, I didn't hear what happened prior to my coming on. But the short answer as to why we're here is that the story is now all around that said that there's a collapse that happened, and that a lot of link happened to the Bahamas, because that is where the entity was headquartered. The history of it, of course, indicates that they were initially headquartered in Hong Kong, then moved to the Bahamas. The link to the rest of the Caribbean, though, becomes a little more interesting, because the registration happened in terms of that link to the Bahamas and what it was to Hong Kong, started out in Antigua. So there is an international business corporation registered in Antigua. And then they in turn operated the way traditional international business corporations have happened across the Caribbean. You register in one jurisdiction, but you do not necessarily maintain your functional operations there. And that's the nature of the industry that we've had. However, we then fast forwarded a little bit. So in Bahamas, you had a situation where there, a lot of activity centered around the Bahamas. And ultimately there was, of course, that insolvency operation that came about. Now, the question for me, if I were to look to what now in the Caribbean, if we were to move beyond what is happening in court and so on, which I will not delve into and cannot in any event, what I think we now need to look at are the questions relating to regulatory model, if that arises.
But before we get to that, Chris, because I want us to explore that fully in the context of solutions, I want to have Oliver say something to which I want to ask both you and Gabriel to react. Because when you mentioned that there was this establishment of this corporate framework in the Bahamas or in Antigua, Oliver, this was really a shell, was it, in terms of its governance and internal accountability? My understanding is that there was no board, for instance, or that there was no compliance regime, internal compliance regime. What were we looking at in that context? And then I would like, without me coming back in, both Gabriel and Chris to respond to that in terms of what you describe as what the internal FTX looked like.
Well, I mean, I want to start by saying I'm not privy to the governance structure formally, but
I understand.
a lot of information has made its way onto the internet. And, you know, one thing that immediately comes to mind is that the corporate structure of SBF's portfolio consisted of hundreds of companies with very obscure intercompany relationships. One would look at that and it would be reasonable to assume that that is a deliberate obfuscation of financial, trails of accountability. Now, in terms of governance, SBF really has, for all intents and purposes, run FTX as a benevolent, dictator, if you will. There has never really been much reference to board of directors. Now, in terms of compliance controls, what is interesting and curious is that there are compliance controls in effect. There are AML programs in effect at FTX. But here we are asked to believe that essentially a $10 billion gap in the balance sheet was not known by whoever sat on the board, whoever sat in the AML department, whoever sat behind the financial controls, whoever was operating the accounting systems, and that somehow or the other, according to SBF's accounts, he was in over his head and this got away from him. And I think it stretches, credibility to the absolute limit, to unbelievable that you are not aware that $10 billion of assets which do not belong to you, assets which were invested into private equity agreements, assets which were traded irresponsibly through the trading arm, which is a separate business to the business of FTX. I'll stop there. I mean, there's a lot that's going to come to light.
That's absolutely important place to stop, because I want to ask Gabriel, what should that look like from the context of an organization like FTX handling what it does, what you described earlier, billions of dollars in that way, operating an exchange with Alameda? What should that look like, and what are we learning so far that was not there?
I instead of telling you what it should look like, I'll tell you a story.
Sure.
One of the largest exchanges in the world was looking at Barbados, one of the largest digital asset exchanges, very similar to FTX, their largest competitor. I don't think I need to say the name. And they met with our government. And one of the persons present in that meeting representing our government was Professor Avinash Prasad. And in looking at establishing in Barbados, Professor Prasad said, "You're welcome. Our existing regulations fit perfectly for this type of activity." And those existing regulations are such that you have a separation of user funds via custody, you have a separation of the broker, and you have a separation of the exchange. Now, this exchange argued that was the old traditional way of doing things. Welcome to the new age of cryptocurrencies, where the user trades directly with the exchange and the exchange acts as the custody and the broker. And Professor Prasad said, no way, Barbados will never allow this. We simply cannot change due process and accurate regulation in favor of technology, because the reality is it doesn't matter what type of asset, what type of technology, what type of innovation, these types of procedures are implemented because you need customer protection. You need to ensure things like net capital balance are in place. You need to ensure things like monitoring, and all of the various activities that go around how such an enterprise should operate. Needless to say, that company never came to Barbados. And at the time, I was fairly upset with Professor Prasad, saying, you know, you're standing in the way of innovation and you're stopping Barbados from moving to the front of the global stage. And after this FTX fiasco, I have to give Professor Prasad Jack his jacket, because exactly what he had described, we have seen come to pass with FTX. And I saw an interesting argument online that FTX's regulation in Bahamas was not regulation. The commingling and the ability to act as broker, as custody, as exchange, allowed them to front run client trades. It allowed them to manipulate the market. It allowed them to, allow funds to disappear in what can be considered fraudulent-based activities. So I think that really encapsulates what I'm trying to say, is that traditional regulation of the standard security exchanges exist for a reason, because these types of events were known to regulators from history. And as a result, those who did not embrace that traditional means of due process are now facing the consequences, and millions of users have been burnt as a result. And billions of dollars of user funds, I don't want to use the word stolen, I'll leave that for a jury to define those terms, but billions of dollars of user funds have disappeared as a result.
And Chris, this is precisely why I wanted you to hold the horse of regulation back, because in this is the consequence of conflicts of interest and due diligence. There are many funds that would be investing those billions of dollars that Gabe spoke about. And more importantly, we already have a question in the chat about this, Chris, is the idea that there is that legislative, that legal and regulatory framework that's supposed to be, at least for us in the region, a hallmark of how we become attractive to diversify our economies away from tourism, to be able to support other means and more cutting edge ways of being able to do business. And so we look for that, and investors should look for that, and entities like FTX should also look for that. But tell us what you're learning or what you've seen about this particular environment and the point you were making too about the regulation.
Okay, the point, and getting back to where Gabriel left off, the fact is that there was a board for FTX, if we were to look at it that way. The question is, what was the capacity of the board to effectively influence how the entity operated? And I had the chance, I looked at closely, for example, the IBC Act in Antigua, and the similar one in the Bahamas. And except for change of section numbers, effectively what you have is more or less section 60 of the Antigua and Barbuda Act is the same that you have in the Bahamas as section 40. And what it does, interestingly enough, is that in an attempt to attract incorporation of businesses to the region with the hope that would have influenced, and it has over time had some impact on our economic development in the region. We can't avoid seeing that. But what it has saying there, very, very interesting provision in Antigua, as is the case in Bahamas, is one which effectively says that notwithstanding that you have a board of directors with a duty of care, fiduciary obligation, by unanimous decision of the shareholders, or even a single shareholder who has unanimity, you can effectively constrain the capacity of that board to act and carry out what would be ordinary fiduciary obligations. And what that does is that even though you then go on to speak to other provisions, it comes back to what is the duty and obligation of that board. And I dare say that when you look, for example, in the case of Antigua, though there may be issues of accountability, good governance, and everything else, the question is, what was the obligation of the board having regard to any constraints that may or may not have been placed? I don't know what may have happened, but I'm just saying the law that we have now puts us in a position where we will have to start looking not just about regulation and compliance by reference to usual financial services sector arrangements, but by reference in a significant way to good corporate governance. And I have, for the last 20 or so years, been saying, and I'm not a lone wolf at all in the wilderness, been saying that, we need to pay a lot more attention to conduct of business regulation and not so much purely prudential regulation, which has been our model. Because when you start looking at conduct, and if it is done properly, prudential naturally is pulled into it in any event. But what we have happening is that in the interest of laxity in some instances, in the interest of what we consider to be a capacity to compete with others, we have set out some environments which allow for boards not to be able to do what they traditionally would be able to do. And we're seeing this coming home with FTX matter, was the fact that there was no effective board doing what a regular board would have been able to do. And therein was the problem, I think. And I think as we look at regulatory model going forward, the question must be, how do we better analyze the nature of businesses that we admit? And how do we then put effective systems in place to regulate them? I also say in relation to that, that it's quite clear to me that we will never be able to effectively regulate every single entity that we register. That is a fact. But what we must do is have a risk-based approach. And for me, I tell people in my approach to regulation, contract, everything else, I live by three simple letters. IAM. We're talking about risk identification, risk allocation, and risk management. And I think in very instances, what we need to do a little better at, including in this area, is start identifying the risk. And hopefully, coming out of this fiasco, we will be able to identify further and other risks, which must be properly allocated and provided for in our regulatory and compliance models.
Absolutely. And Oliver, you and Gabe were able to start BIT. And for both of you, you were able to operate it successfully. You would have been able to put together nuts and bolts of that from a corporate structure, but you also would have had to win over persons. I believe, if I recall correctly, you were also able to be the first entity in the region to be able to raise capital. I believe around 14 million. You can correct me if I'm wrong. But they would have conducted something called more than that. Due diligence on you. They would have been able to see your books and be able to evaluate whether you were running a scam, a shell entity or anything. Tell us, let's start with Oliver on this. What implications would be for what implications would FTX have on another regional entity, let's say BIT or another similar entity, let's say Panther wanted to operate in the region, in terms of regulatory suspicion, cynicism, and so on? Do you think it will have any impact at all, or what do you think would be the lasting implications? Because I want to make this point too, just before you start, Gabe. It's important for us in the context of establishing models for sustainable development that we're able to diversify our economies away from dependence on sun, sand, and sea, and into other areas as well. So it's important that we're able to court and effectively support, as Chris mentioned, with legal and legislative frameworks, that those types of businesses. So please tell us, what do you think would be the consequence of that?
Yeah, I mean, first and foremost, there are at BIT, I was the CFO, and Gabe and I went to great lengths to ensure that our cybersecurity key management systems were appropriate. We were one of the first exchanges to implement multi-signature using a fairly rudimentary solution by one of our good friends, Eric Lombroso, Cypherx. That speaks to cybersecurity risk management, offline funds versus online funds. When you, the exchange, are taking custody of assets, it never would have crossed our mind in a million years to take customer deposits and repurpose them. in any sort of risk on asset. Our obligation was to maintain a full reserve. When we expanded the business model to include the Barbadian digital dollar, which was one of the very early stable coins, and when we further went on to establish or advocate for the sandbox regime in Barbados, we were required to maintain reserves which were in excess of 100% backing for the Barbadian digital dollar. So to me, that is basic financial prudence and risk management 101. When you have assets which are supposed to be sequestered as a deposit for the customer, they should be held as a full reserve. BIT was not a banking organization. We did not have a license to maintain a fractional reserve and loan out deposits. Further, this type of organization is not backed by a central bank as a sort of lender of last resort that may bail you out in the event of systemic collapse. And so FTX was large enough in the crypto industry in terms of its volumes and deposits that it really represented, is the equivalent of the collapse of a major institution in the industry. However, there is no Federal Reserve or central bank that is going to jump in and say, hold on, this is too big to fail. And so, on the control side, they're just basic principles. One of my big concerns, and one thing I would be cautious around, the big concern is that this undoubtedly will have a reputational blowback on the region as a whole. And it should not, because there are many sovereign nations in this part of the world, and they each have their own legal frameworks. There are similarities, but they're not one and the same. And so that's my concern on the one hand. And equally important, the second concern is that the regulation overreacts at this point in time. We don't need an overreaction. What we need is appropriate controls. And one wonderful thing about blockchain technology is that it does improve accountability, transparency, verifiability, and efficiency. So it's been about a decade. Persons like myself and Gabriel have been advocating for appropriate regulation regionally and globally. And I would say after a decade, the response times are still inappropriate. We need to have better responsiveness to addressing these issues. There are many, many experts in the field globally that can be relied on for crafting appropriate frameworks to deal with DLT, distributed ledger technology, and all the FTX highlights is that regulation is still lagging the consumer.
Great. And that leads us directly where I want us to spend the last half an hour, which is focused on solutions. And I want to start with Gabriel. One of the things we saw here was that FTX was actually operating. You can correct anything that I say if it's wrong, but appeared to be operating as almost a lender of last resort, or the bailout operation for many other funds, I would say, or organizations that were failing, crypto organizations that were failing. And it sort of also give the whole of crypto a bad name. It appeared as if, it was in trouble, and FTX being the savior then fails. What is your big concern? Just like with the reputational risk we're talking about, and what do you see as one of the solutions to it?
Well, I would like to correct you, because FTX was actually part and partial implicit in those other companies imploding. They had a hand in it. Evidence is now coming out to show whether it was Three Arrow Capital. The founders claim Sam hunted their positions. This is what we were talking about by ensuring the brokerage is separated than the exchange. When the two are the same, you can front run your clients, and you can make bets in front of your clients' positions, which the Three Arrow Capital founders claim FTX did, which inevitably caused their fund to implode. There is the Terra Luna collapse. Again, similar claims are coming out that FTX had a hand in that. And there was a lot of over leverage in the industry. And look, the irony of this all is that Bitcoin and blockchain technology was designed so that you don't need to trust anyone you can verify with pure mathematics. And here we are a decade later, utilizing platforms that are centralized with the expression of, hey, trust me. And that's the issue. And the reality of it is the fundamentals of the technology remain strong. The last I checked, I could still send and receive Bitcoin and have been able to do so effectively without any hiccups in the technology. The network uptime remains one of the best in the world. The network itself is the strongest supercomputer in the world. But yet, centralized fraudulent behavior is now giving this technology a bad rap. So to the uneducated, it seems like crypto is doomed and it's really bad. But to the educated, this is obviously a case of temporary, short-lived market sentiments. It's one of the reasons I'm actively still buying Bitcoin and increasing heavily as the legs drop, because again, I know the technology remains unaffected. It remains extremely powerful. So I wanted to touch on that and separate the centralized, bad, fraudulent behavior from the genesis of this incredible, phenomenal technology called Bitcoin, and separately blockchain technology. And I hope that the audience understands that the two are very, very different. And we shouldn't let a century-old business model that was using inefficient regulation and oversight to pass a broad stroke of negativity against the technology. Secondly to that, I'm going to say that I don't believe any small island developing state is equipped to take on this technology. We've seen it in Barbados as an example, with well over a decade experience of working with our regulators on a daily basis, where they're simply under-resourced, understaffed, and undereducated on this rapidly evolving field. You know, this year's NFTs and the metaverse. Last year was ICOs and initial exchange offerings. Year before that were the exchanges themselves. The regulators simply can't keep up. They're not equipped to keep up. And therefore, I take the position that many of these companies should not be operating from our shores, because we simply cannot effectively police and enforce the responsible regulation required to allow these systems to operate while avoiding systemic risk and user risk. And as a result, we've seen it in Bahamas with FTX imploding. Listen, this was happening over a period of time for weeks. We only saw action taken after it was too late. A classic example, we saw something near sinful where Bahamians were allowed to withdraw their funds first and others were stuck holding the bag. And the regulators, apparently, according to Sam, in an online statement, were quiet on the topic. But that should have never have happened. That should have, that there should have been controls in place to prevent against such a event like that. The minute rumors came out of insolvency, the regulators should have been on top of it. And it may have been a situation of lacking awareness. It may have been a situation of lacking understanding of what was about to happen. It may have been a situation of lacking resources where simply it was the weekend and I ain't got time for this, I'm going to sleep. Whereas in a developed nation, you would see a much more active approach to handling these types of events. And finally, what I would say is I would echo Oliver's statements. You know, I'm speaking to CARICOM, you know, we're 15 independent and sovereign nations. The action of one regulator and one regulatory body and their government shouldn't affect the actions and decisions taken by other governments. Again, I would repeat that the Barbados government has had zero exposure to any of this, simply because we weren't willing to take on the risk of acting host and changing decade-old traditional methodologies to allow a new player in who came boasting billions of dollars worth of activity and millions of users. And yes, it may have hurt us in the short term from a public perception. Yes, it didn't allow us to drive more jobs and opportunities. Yes, it hasn't encouraged more blockchain companies and technology companies into our shores, which we all desperately want. But now that we can look back at it, maybe we dodged a massive bullet on this one. And the reality of it is, this is why we need to be very careful in how we take on this industry. Now, I'm not saying that we can't focus on a specific area and get it done right. I'm saying that it requires us to be very careful in how we approach this industry.
Thank you very much. That's excellent. Chris, the person who was due to moderate this panel is my good friend Sarah Beth Felix, who was on a panel with me yesterday on the risk and solutions. And Sarah sent me some comments. There are too many to get through, but a lot of them focused on regulation. A lot of them focused on the AML regulation, oversight, and the regulatory framework within which FTX was able to operate. And then subsequent to that. And I wish we had time to go through them, but they're very insightful in terms of trying to inform and trying to exercise our minds around the question of what exactly was allowed to happen in the name of regulation in relation to FTX. I want to ask you about that because there's a comment from the audience in the chat that says you make a salient point, which is the current theme of this conference related to the legislative framework, and that governance is only as good as the framework supporting it. The other thing I'd like to ask you to touch upon right away, because I know that real estate is also part of something that you cover professionally, is what are some of the other contagion and impacts from the collapse of FTX? Everything from the real estate markets to likely financial implications for other stakeholders in the Caribbean, what that could mean for our economic development, and the reputational issues that Oliver also spoke about.
Well, let me start where both Gabriel and Oliver touched on that. In an ideal world, the entirety of the Caribbean should not be affected. But in reality, we will all be affected by what has happened because the OECD and all the others looking on will say, there goes another instance again of the Caribbean demonstrating that it is taking on more than it can chew, biting off much more than it can chew. That is sadly what is going to happen. It is also true that insofar as the FTX matter is concerned, the truth is that we don't really know yet what the full sum is going to be of what the contagion, if any, has already been. But what I am suspecting is that you have had a number of persons and institutions that would have invested in one way or another in something that may be linked to FTX or otherwise. We know, for example, out of Ontario, for example, that there's a teachers union that had invested up to $95 million there, and there were several others. And I would shudder to think that we don't have some level of exposure across the region. We also have had in recent years a lot of financial institutions across the region that have become much more bullish and have in fact been out there in the market where FTX and other such matters are concerned. Not necessarily the company, but the type of activity that they're involved in and engaged in. And again, I would not be surprised, and I think we need to see where that ends up. In the case of the Bahamas, they have had an interesting experience, and we do know, for example, that the Attorney General and others there have had to be now defending what Gabriel spoke about as to the regulatory approach that was taken and whether or not they acted improperly. We know, for example, that within days of the institution having gone under, you had advertisement of high-end real estate and so on in the Bahamas linked to the entity that was effectively being made available for sale, and come now, get it quick sort of approach is being taken. And I think that what has happened as well is that there were many persons across the region who saw the type of activity as something that they could have made money from. I personally will say, and others I'm sure could say, that I've had many persons over the last year or beyond calling me, inviting me to get involved in activities in this area. And the sad reality is that when they call, I would very often say, okay, fine, tell me a little bit about your understanding of what you're marketing or trying to sell to me. And invariably the answers would come back telling me that they know jack nothing, for want of an expression, right? And I think that we have to now get to that point of seeking to blame the institutions themselves as to how it is that they have these frontline persons going out and marketing products, which by their very nature requires sophisticated understanding. And I think one of the good things about traditional market regulation is that there was a recognition, for example, in traditional financial sector market regulation, that the area of securities was, for example, meant largely for sophisticated investors. And particularly, there's some products and services that are treated as being there for sophisticated persons to deal with, because the understanding is you're in a better position to understand, you're in a better position to get legal and other advice if you need it, and you're in a better position to lose if you have to lose at the gamble. But now what we have happening is that what we had is something going out to all and sundry. And there are persons who I would from time to time hear on the street, perhaps in Barbados, Gabriel and Oliver, you may have a much more sophisticated market generally, but persons telling you about all their investments and telling you all these wonderful things about what was happening in the market. And you smile to wonder how much they really know, which very often is not a lot. And the question then takes us to another level of the extent to which our regulatory model requires greater education of generally education in persons. Because I also happen to think, and I'll give you a quick example as to why I said that. This panel that we're doing, I find to be very instructive in terms of what we're covering and the questions that could be coming out of it. There's a senior journalist I reached out to say, here's something. And the two-line response coming back was talk shop. And I thought my question to him was, how much do you or most of the others who consider this to be a talk shop know about the financial markets, how they operate, how these other things? And the short answer is that he doesn't know. And I can say that without any hesitation. But that is typically what happens, that we have persons who are out there who should be assisting an education drive, assisting persons to become better aware, assisting us to advocate for better regulatory and other approaches, who sadly do not come onto the board, do not know enough, and very often when they write what people like Gabriel or Oliver, who know the market much better than I would say, what crap is this that you're putting up? Because they do not take the time to educate, to assist a greater development. And there is a great gap, which I'm very happy that this panel and others will take into account and try to help people to bridge that gap of knowledge divide that we have.
I want to ask.
Boyce, I'd like to respond to that if I could.
I want to ask you to. That's exactly what I want to ask you to do. And while you're at it, talk about the accountability matrix or continuum here, because as you mentioned earlier about the use of Alameda, the terms of use specifically prohibited, as I understand, the commingling of funds and so on. Talk about where, not only the education piece and so on, but where what lesson can those of us in the region learn from whatever breakdown might have been in that? Who holds that gate? Who closes that gate? In terms of
Dr. Boyce, it's no secret that Oliver and myself have been educating this region for the last decade. We've spoken at the Caribbean Development Bank before,
yes.
But oftentimes you find in the Caribbean we don't trust ourselves, and we've seen it in Bahamas, we've seen it in Jamaica, where they didn't use technology built by other Caribbean personnel. In the case of the central bank digital currency, not only did we invent it in Barbados, we built it, we implemented it, they still turn to foreign actors to produce and offer what I consider, and this is my opinion, to be inferior technology. And it's often the case where we turn to others outside of our region when you have local experts who actually care about the region. And that's the biggest problem that our regulators and our government keep doing. Our governments in the Caribbean region ignore our localized and domestic expertise is because they think some American or some European knows more than us. But yet we were internationally educated. We have a dire care to wanting to see our region rise. We're going to ensure the right methodologies and processes are implemented because this is ultimately our home. This is ultimately our reputation. This is where we're going to reside. This is where we want to rest our head at night. And the reality of it is that's a cancer in our region. And it's quite sad that we keep repeating this. because the truth is, had you turned to experts in the region, they would have pointed all of this out and said, this is a very bad thing that's about to happen. Here's the things that you need to do. But instead, you allowed an international player to dangle the carrot in front of their face. And the result of it is all of us are being burnt. The decade of avocation and education that persons like myself put in is all gone to waste now, because we in the Caribbean look like the massive banana republic that will sell our souls out to anybody. And the reality of it is, the next steps that we're going to see is a new type of blacklist. That new blacklist is going to come out and it's going to say, hey, Bahamas, you have inefficient and improper regulatory environments and controls, and therefore you're going to be on this new list until you fix A, B, and C. That's coming down the pipeline, and that's going to burn us harder than anything else. And the next thing that we need to start doing is allowing locals to have a greater voice, making sure those locals are given that stage and allowing them to have part of the business aspect of participating and serving the environment, which oftentimes they're not allowed to do. Oftentimes they're kept in the dark. Oftentimes they're ignored in favor of an international party. That is one of the biggest issues in our region right now. I can touch on a couple of other key points, but I'm going to let Oliver speak a little bit as well about his opinion.
Go right ahead, Oliver, please.
Yeah, I think, I echo the points on education are absolutely critical. Again, I'm listening to both Gabriel and Chris speak on the subject. And what keeps coming to my mind is that there are instruments being traded, and some of these instruments should be designated as securities. And if they were, they would be covered by the existing legal framework. And retail investors would not have the access to some of these products. Another thing that comes to mind is it's not just in the securities domain. Some of these are credit products, and the risk underwriting is opaque. The practices are improper, and it's not. I think it's the general. One of the general assumptions that's been made in the crypto markets for entrepreneurs is that we cannot operate in the US because it's overly restrictive, and it's very difficult to even understand how to operate in the US. And therefore, we need to domicile our businesses offshore. And so when you're looking for offshore businesses, you're trying to find the perfect marriage between trustworthy and credible and permissive. And what ends up happening is bad actors look for the most lax regulatory framework they can find. So there's this game of regulatory arbitrage, which is happening on a global scale. The threats and the downside to this arbitrage can manifest in the things that we see with FTX, which is fraud, reputational damage, customer loss of funds, and so forth. I want to counter and say that regulatory arbitrage is also the opportunity that particularly this region needs to be mindful of and find a way to harness responsibly to drive our economic growth through this 21st century, which we so desperately need. The ability to lay out a framework that makes clear how an exchange should operate, how a wallet should operate, what is a security and what is a utility token, what is the distinguishing divide between a smart contract, a DAO, and an operator, as an example. So there are some very well established and bounded questions that builders, whether you're building a centralized blockchain solution or a decentralized protocol solution, have these, and the answers to these questions, even clarification, represents a massive economic opportunity. If done responsibly, it also prevents and protects against this irresponsible and improper behavior. So there's this balance. You need to have local involvement and engagement on a regulatory front, on a job creation front. There's bona fide incentives for the long-term prosperity of the region that you're from. On the other hand, there is a lot of subject matter, deep expertise, which exists offshore. This onshore-offshore partnership model needs to be enacted. I don't see any other way, because as Gabriel has said earlier, regulators are not equipped, and government on a broad spectrum in the region is not equipped. The budgets aren't there. The bureaucracy is excessive. We're just not there yet. And however, what is here today is this extraordinary generational technology that is transforming finance, and offshore finance has been the bread and butter outside of tourism for many Caribbean territories. So no one said it would be easy, but there needs to be action taken between local and international bodies to put in place the correct structures. And it's been too long. This is as much the fault. It's the absence of regulation that created this problem as much as bad actors created the problem.
Thank you very much. As we go into the close, I'd like to ask each of you to give us your wrap-up comments, your takeaways. And there's a comment in the audience that I believe absolutely captures what we mentioned at the top here, which is we're being solutions focused. It says, Ambassador Abed, I could not agree with you more, with your comments more. What do we need to do to rebuild trust, enhance trustworthiness, manage risk, and assure quality outcomes? I'd like to start the takeaways round with Chris. Chris, a lot has been said today in terms of what we're learning from FTX and whether it has set us back, how far it has set us back, and how we can recover. But a lot of other important things have been said about what pre-existed FTX in terms of the right environment that was being described by both Gabriel and Oliver. And I want to ask you to think about and to share with us your own views on not only what has happened and what might have pre-existed, but how can we go forward from FTX?
I'm going to go a little out in left field on this one.
Sure.
20 or so years ago, 2 decades or so ago, when I was writing my PhD in the area of legal aspects of banking and finance, looking at financial market regulation, they were at about the 22nd draft of the Caribbean Financial Services Agreement. As far as I know, that has still not been completed. In that arrangement, which would have allowed for movement across the region in a much more significant way, there was also an arrangement which would have made it much more possible for our knowledge base to be coalesced, and for us to rely more on each other in how we develop and implement our regulatory models. We hear about us not having appropriate, governments not having enough and the rest of it and so on. That was a model that could have been there. And I would say, as I close here, that as we move forward, it may be time, coming out of this experience and others, for us to revisit that model and to see how it is that we can create an environment which allows for us to rely more on each other, to do more of what Gabriel and Oliver have been saying, that we have local and regional expertise. Much of it not captured as best we can, because we're still operating too fragmented a way in a small region, where by necessity we have a small number of professionals with enhanced knowledge that we can rely upon. And I would like to think and invite, in this context with the CDB, for CARICOM, I'm sure they have observers here, to re-examine where they're going, to re-examine how they can be useful to the region, and to see how, in particular, we can get to the financial services, bearing in mind something that G.B. Gladstone said in the 1890s, that finance, so to speak, is the heart of the economy, or the stomach, as he said it was, from which all other organs take their tone. And if we don't get this right, whatever else we're doing will run into problems. And I think we have a great opportunity coming out of this debacle, which we can, in fact, move forward, knowing that the financial services, as it has enhanced or has improved to become or evolved to become, is not going away. But there are things we can do to rely more on ourselves and to develop systems that can rely more on the knowledge and skill sets that we have in the region to make it better and to ensure that we move forward in a much better way. And I call upon CARICOM again as I close to do more than they have done in this regard.
Thank you. Oliver, how do we get this right?
It would be fantastic if we could have better CARICOM participation. That would be, I fully support that and say I'm a man of action. So if there are going to be actions taken, include me in the conversation so that I can help. With that said, my perspective is that primarily of the entrepreneur, and the challenges that we face on a daily basis is that of a lack of clarity and not understanding how to operate within a given market, the channels of communication between industry and regulators are not as open as they should be. There really is poor communication between the parties, and then there is a risk that through ignorance you are going to receive an adverse response, which disincentivizes having these discussions. There needs to be a forum in which you can present business models, where you can present what you intend to do and how you intend to apply novel technology to add value to the region, and have that open discussion. And I think establishing that communication platform between industry and regulators, and making it abundantly clear what the process is, and knowing that the door is always open, is going to be the best way to get the information flowing between the actual operators and actors and the regulators. And out of that will come the solutions.
Well, hopefully this panel helps with being a catalyst for that information flow and rethink. Gabriel, how do we get this right?
First of all, the very first thing that needs to be done is we need to handle the bad actors, those who are issuing unregulated securities, those who are operating poorly designed vehicles. The SPFs need to be swiftly handled. Right now, the market is calling for his arrest. We understand that due process needs to take place. A case and evidence needs to be built. But the longer that lingers, the more interviews that man's allowed to give, the larger of a joke we become in the region. So the swift handling of FTX is paramount, and the accurate handling of it as well. The second thing we need to do is, Dr. Boyce, you know that I've always been preaching for One Caribbean. We need to actually live that right now. And in order to do that, one of the key aspects is we cannot be jacks of all trades and masters of none. What we need to do is turn to the CARICOM countries, where each nation in CARICOM takes on one area of this financial technology and becomes an expert in it. One island becomes an expert in the exchange operations. One island becomes an expert in the CBDCs and stablecoins. One island becomes an expert of initial coin offerings, initial exchange offerings. One becomes an expert of decentralized autonomous organizations. One becomes an expert in the metaverse, and the list goes on. There's more than enough. There's more than enough business to share. The problem is we aren't looking at this as a One Caribbean approach. We're looking at this as my nation needs to be the best and win across the board. And that isn't working. We've seen that quite simply occur in the last couple of weeks. And what happens when we try to be mavericks on our own? There's a real advantage here to come together as a region and take on this new area of innovation and really lead the world in it. The third thing we need to do, and Oliver touched on it, is greater collaboration between the private and the public sector. The private sector know what they're doing in this industry. They are the leaders of the knowledge. They are the leaders in the implementation. The public sector needs to ensure that there's a level of clarity so that those entrepreneurs and those builders have a responsible and safe environment to build within. And that doesn't exist today. And those are the three things that we need to do to make this right. In the short term, our reputation is sullied right now in the region. Again, we're seen as the home for pirates. And that is quite sad to me. I just saw a Bloomberg article comparing us to the host of the pirate nations. I'm following the past. And that is quite sad. But the reality is, if we were to focus on the long-term agenda, the region stands to win if we come together. The region stands to win if we act as one unit, but letting each island become a center of excellence for a particular area of financial technology. And the region stands to win if we turn to our domestic players who are the current experts in their own right, and we utilize them. Again, I would repeat, Locals wish to protect their country. They care about their nation. They care about their fellow citizen. And it's those locals who are going to ensure that the right models are implemented alongside their regulators. Yes, international subject matters can be utilized, but it's the locals who will ensure that the right methodologies and processes are implemented.
Brilliant. There are two comments in the panel, and I want to thank you for that, Gabriel. There are two comments in the panel that sum up exactly what I was about to say. The first said, this has been an excellent segment. Government has to take serious commitment to the sector, no quick fix, ensure our regulators are up to task. The second one says, excellent session with great suggestions. Hoping recommendations can be taken and used to process the Caribbean forward. It is that part that I want to focus on, can be taken forward and to move us forward. This particular panel, for this particular panel, I could not have asked for a more eloquent exposition on the collapse of FTX, what it means for us now in terms of implications for the region, and what it can mean for us going forward. But most importantly, audience, those 1,200 of you, you heard solutions. You heard examples of what are likely to be frustrations here, but you also heard solutions. And I take no credit for that. I'd like to thank my panelists for delivering on their promise. When I rang them and I asked each of them to participate without hesitation, and I can see exactly why. Their head and their hearts are in the right place, and I'd like to thank them profusely for being able to make the time to contribute today. Chris Malcolm, thank you for your insightful comments. For Oliver Gale, whom we've lost on the panel due to technical difficulty, thank you, Oliver, for your excellent contributions. And Ambassador Gabriel Abed, I've always been a fan of the way you've managed to express and break down very difficult, complex concepts in a way that we can understand, and you delivered again today. Thanks to each of you, and thank you to the audience for joining us today as we tackle this very important and critical subject that will impact the evolution and sustainable development of the economic region that we call home. Thank you all for joining us today, and have a great evening.
Dr. Boyce, thank you for having us.